be an indicator that goes something like this. So that sell comes in there, and then all of a sudden when that sell comes in there, there's going to be a big supply block coming in from there. In other words, it's a response to a sell. So every trading view indicator is going to have a response to a sell at that price. Now, that's not wrong to do that. That's perfectly visible, perfectly valid. But obviously, it's hindsight. This is hindsight. What we've got is we've got foresight to see that there's maybe supply coming in at that price. Maybe coming in at that price. So we're not guessing about its existence. We are looking at the possibility that it does provide us with an opportunity. When you look at this gold today, one of the things that we noticed this morning, and it came in right here, you'll see that there is this demand area and a 2 sigma area right at that point. Demand in 2 sigma, 750, 755, London session open. I've got a demand area here in advance. I've also got a 56 pullback trade from a prior swing. In other words, I'm seeing all of these things in advance. Look at what happened here. 10 minutes after the cash, after that demand was placed into the markets, 10 minutes after the demand was visible, the price traded into that demand. Now, that might on its own be of no value to you if the value is bearish. But the value is not bearish, was it? The value was actually incredibly bullish into demand. Now, what is this demand? It's not real demand, as in net buyers pouring into the markets, but it might be. What it is liquidation buyers pouring into the market. So it's short covers. It's long liquidations. So these price areas might not get a lot of short selling, like this area here. Might not get a lot of short selling, and I don't think it'll get any short selling because the market's very bullish. But you can see what happens. The profit taking of the longs causes the price to drop back down again. The profit taking of the shorts is going to cause the price to push back up again, one would imagine. But this wasn't just profit taking buying, because the value was massively divergent here as well. So it wasn't just profit taking buying. It was net commercial buying as well. So it wasn't just the algorithms that were buying here, it was the commercials. Well, if the algorithms buy at the same time as the commercials, you've got a buy trade. I'm telling you, you absolutely have a buy trade. And that was the trade we got at the cash open today. It timed in perfectly with 8 o'clock in the London session. And my God, look at what happened. Is that not, I think Reeve called this trade of the decade. Is that not trade of the decade based on the tool set that we've got available, based on the rules that we always trade to? I think he called it trade of the century. The people on Jupiter were talking about this trade. It was that good a trade. This trade was even visible from outer space. It was that obvious. This trade was more visible than the pyramids. This was spectacular. And this trade went from 22.11 to 22.35. $2,400 of buy side amazingness. Buy side amazingness. Look at it. It's crazy. Crazy profitable if you decide to try and trade these things. Crazy profitable. And this was one of them. This was just superb. Absolutely superb. Look at that. You couldn't make this shit up, could you? You honestly couldn't make this up. It was that good a trade. And then we hit the 2 sigma. And then at the 2 sigma level here, the value starts diverging. We get a liquidity sweep into supply. Guess what happens? The sell comes in. And from that sell, off of a supply level that we already knew about, off a 2 sigma level that we already knew about, off of a liquidity sweep that we always ask you to now put onto your charts, I sold it. No shit, Sherlock. And we went from 38s to a low price of 22s for $1,600 per contract. Simple as that, guys. Simple. as that.